And that means we are live here on YouTube, Tackle Trading's halftime report, 5/6/2019. Matt and Tim and Cody. Matt, how you doing today, brother?
Tim, doing good, doing fantastic. Excited to be here.
Doing better than the Kentucky Derby winner or the presumed winner from the race. Did you see that?
I did not see the race. My wife's a big horse race fan, and it was interesting to watch somebody get disqualified 20 minutes after the Kentucky Derby for the first time in its history. Very controversial too. So I haven't watched the race, but read a couple articles on it, and obviously talked to my wife about it, and it was controversial. I kind of gave the analogy earlier today. It reminded me of, if you're watching a basketball game and the last shot goes up and they said, oh no, Dame Lillard traveled, so we're going to disqualify it at 20 minutes. But I am certainly not an expert on horse racing and horse racing rules, so I don't know what the rule was, but obviously a little surprising, a little controversial coming out of the horse race.
Well, Cody was saying a good point as well. I mean, so much gambling on horse racing around the country, around the world, and this is one of the biggest races, if not the biggest race. I'm not a horse guy, so I don't know, but I would assume the Kentucky Derby is the biggest one. There's got to be a lot of money.
You know, it'd be more shocking though.
Yeah.
To watch the S&P 500 go green after a tremendous 2% drop last night.
Yeah. It was interesting, though, because the intraday action, we'll break that down here in a minute. I don't know if it would shock me if we rallied and we actually went green for the day. I mean, I don't think it would happen. You'd have to go another full percent from here.
No, you'd have to go at least 30 points. I mean, you're going to end the day down, but it just shows you the resiliency of this marketplace. I mean, think about it for a second. Trump last night, or over the weekend, Trump threatens to put 25% more tariffs on China. Right. And what's the news been for 4 straight months, Tim?
Well, I mean, basically things are moving along. They're progressing. We're going to have a trade deal, and, they're all in bed with each other and they're going to dinners and everything's working out really well. And the market assumed things were going to come out fine. Right. They even came up with those, what were they? The memorandums of understanding, I believe.
Yep.
That phrase we had. So, there's all positivity for a long time here.
Oh, we got a deal. It's just around the corner. We got a deal. It's just around the corner. We got a deal. It's just around the corner. We got a deal. It's going to come next week. We got a deal. Everybody's happy. We're having dinner. We're eating steaks. Everybody's good. China's going to buy X amount of industrial products. They're going to buy X amount of soybeans. And then what do we see starting earlier last week? We started seeing, we're going to give in on some of that intellectual property protection. Yeah, we're going to give in a little bit on that. Soft dollar type arguments. And then it's like over the weekend, nope, done. If we don't get a deal by next Friday, we're going to put 25% tariffs on China. And China responds by saying, okay, hold my beer.
Yeah.
Watch this. And they threaten to walk away from the deal. So a lot of volatility, but again, I mean, you got to look at the market and see how the market was resilient on top of that. It could have been a bloodbath this morning, and it wasn't.
It was not. In fact, go down to the futures market here, Matt, and go down to a 5 or 15-minute chart. I did a little video. Coach Noah sent me a text, and you a text last night and said, have you guys ever seen the futures market open like this? And it grabbed my attention. I hurried and went and grabbed it, looked at the market, did a 2-minute video kind of breaking it down from where those candles were. And that had to be algorithms, Matt, back there yesterday.
Well, a lot of this is before the market is actually opening up.
Sure.
But it was absolutely crazy. There's no doubt about it. And I have seen the market respond like this overnight before. I mean, we have seen the market when Trump was elected president. We saw the market do this when Brexit happened. We saw the market do this when China announced slowing growth on April 21st, 22nd of 2015. So we've seen the market do this before. But when Trump was elected office, the overnight went down 5%, Tim. Before it kind of limit down, and then you saw the buying action coming out of that. When China and when Brexit did it in 2015 and 2016 respectively, 2015 for China in August and 2016 in June for Brexit, you saw the market go down 5% and then follow through down another 4 or 5% in the follow through. You saw initially something very similar happening last night. And I sent out a tweet and I said, hey guys, just keep an eye on how the market's responding from an intraday perspective, basically. Keep an eye on those intraday support levels, intraday resistance levels. And I was looking at, I want to say I was looking right here, Tim, at the time. So if we just kind of kind of showed this market right here. So I was kind of looking at this market right here, that 28.95 level, kind of found its support level right there. And then it came into this 29.10 level, and you see a lot of consolidation. And right then I said, okay, keep an eye on how it's going to perform at that 28.95 and keep an eye on how it's going to perform at the 29.10 level. And as you can see, it actually broke down that 28.95, went about another 10 pips to the downside before it found support right there at that 28.85 level. Once you broke back up in the intraday, coming out here, let me go to a 15-minute chart here so you can kind of see it. Once you firmly establish that intraday level at 29.05, here's the cash open right here, T. You break out of that 29.05 level with some authority, with some volume on the overnight action. You really settled down here, creating a neutral type of range. So when the cash open happened, you broke out of that intraday level of resistance. You showed some strength on some big time volume here. A lot of that's algorithms. A lot of that is algorithms coming into it. And then you have a higher high. Now you have another higher low coming on the intraday trend here. It's going to be fascinating to watch how this market's going to perform now that we have this cash open and have an intraday trend kind of pushing to the upside. Clear level of resistance on the intraday at 29.24 by 29.25. If you can clear that, you should get some momentum to the top side.
Mm-hmm. You know, Matt, this whole thing with the tariffs, is it just a ploy? Is it a tactic? Is it something that you believe the president will follow through on? Is he just trying to get this deal moving forward? Or do you care?
Trump says.
Yeah, just kind of focus on the chart.
I don't trust one thing Trump says.
Yeah. Well, his Twitter feed is very interesting lately, and it is moving markets. There's no doubt about it. Here we are, obviously, on the intraday. We are rallying. We are gaining.
Manipulation, Jim.
Yep.
It's just manipulation at its finest. And, you know, if there's one thing I have always been consistent on, I do not like market manipulators. I'll call out Jamie Dimon when he does it. Elon Musk, I was a big fan of Elon Musk, and when he tried to do it with Tesla, I'm out. And Trump and his cronies at the Fed now, the Treasurer, doing the same thing, and you got to call it out. It's not right.
Couple of companies that had earnings here this morning, Matt. Not a lot of companies with earnings this week compared to other weeks, but we still do have 60 S&P 500 companies reporting their first quarter earnings. I read some data from FactSet that 78% of companies are in and done for the quarter. Most have beat, most have reacted in a positive way, but we've been in a bullish run. Start with Tyson Foods, TSN, if you would. TSN is actually breaking out of a high earnings this morning. Obviously, the chicken maker, food company, not exactly going to be a big mover, but it is running. Cisco, not the chip maker, not the tech company, but SYY, the food company Cisco, breaking out of a high as well. Food companies don't usually grab my attention, Matt. They're not even going to grab my attention here today, even with the strength and breaking out.
Food companies grab my attention if you're concerned about the market, though.
Yeah, it's true. It's a good point. Go with that for a second. That's actually a really good point.
Well, think about it, okay? Food-based companies are defensive by nature. They're typically in the consumer staples sector. It's a non-discretionary type purchase, and food-based companies can be a wonderful, type of protection against some of the aggressive type sectors like biotech and, healthcare in general right now, and discretionaries and energy and industrial. So when you're looking at the sectors, and you're saying, okay, you got 11 sectors out there. Well, you got, of those 11 sectors, you got six of them that are, aggressive in nature, and you got 5 of them that are defensive. And one of the most defensive sectors out there, if I had to put the most defensive, I would say utilities 1, XLRE, full of the REITs 2. Both of them are big time dividend payers. But I'd put consumer staples 3rd, even above finance and healthcare. So I would say it's the 3rd most defensive of the sectors out there. And food-based companies typically, will still buy food in a recession, Tim. So when you're looking at, Cisco here breaking out after a positive earnings report, I don't have their exact numbers here, but it does look like they came in at 79 cents on the actual versus 71 cents on the estimate. So a really good beat on earnings per share. I'm assuming they also beat on revenue, and I'm assuming they had a decent guidance or the confirmed guidance, because you're seeing a real good open here from the cash open, which is the opening of the market. And after the market opened up, obviously some of this is market related because the market's responding bullish coming out of the cash open, but a good trend coming into it, a good pattern coming into it, and now you're breaking out on some a positive beat on earnings. That is something to keep an eye on, Tim. Now, obviously, whenever you're analyzing earnings type positions, you got to drop it into these intraday charts to kind of find a level, and you're looking at a nice little bullish retracement on that intraday coming into an intraday support level right there at 72. Nice little doji hammer type inverted hammer type candle. Look for an upward movement in price. You do have an intraday retracement there, or you could wait for the more conservative and thus higher probability if you do break out of that high at 72.89.
Brokers are running here this morning, Matt. CME and SIBO, they kind of lead the market actually to the upside. CME is up 2.5% and SIBO is up about 2%, probably just on trading volume and whatnot. It's not earnings related. They have May 6 earnings beat estimates. They actually had earnings last week. So
yeah, I didn't see this morning when I was going through my prep work. Wow, talk about a bullish engulfing. That thing's engulfing the previous three candles.
You take out the high there at 180, Matt. That is a trigger.
That's tremendous momentum, and you very rarely see this, guys. I mean, you got three wide range candles here, Tim, and then you have a gap down in price followed by just explosive upward movement in price. Keep an eye on the volume. I'm not seeing a lot of volume midday so far. It's certainly underneath the averages it's had over the course of the last, 2-3 weeks. So keep an eye on that volume. Not a lot of volume on that movement, but that is a bullish engulfing candlestick if you've ever seen one. I'll tell you that.
They did announce they're going to launch a micro E-minis future S&P 500 contract. The ES contract.
I saw that last night in the headline. Is that what it is?
It's got to be that. I mean,
so so basically they're they're creating an E-mini product that is lower in margin, lower in the amount of money per pip. Yeah, I like that. I like that. I don't like the quadruple leveraged ETFs that they've been playing around with the last 2-3 years. But if they create another bite-sized futures product, allows a lot of other people to be able to trade in the futures market. I like that.
Rising tide lifts all boats. SIBO as well. CBOE is actually breaking out.
If you're looking at the two here, CME Group versus the Chicago Board of Options Exchange here, you got to say you like the potential pattern and the potential break on CBOE a little bit more than you do the volatility that you're seeing on the CME Group. That breakout of 102, call it about 102.80 there. Yeah, that's a breakout out of a high base. Again, volume's a little concerning here on the CBOE, but if I'm looking at CBOE versus CME, you give me a close on the CBO above 102.50. You close above 102.50, you got to call that confirmation.
Heck, we're going to stay with the brokers and the exchanges here today. ICE, Matt, the Intercontinental Exchange. I've not looked at this chart in a while now. ICE is on a deeper pullback with that engulfing pattern. That's a very interesting pattern as well.
Bullish engulfing candlestick pattern off a bullish retracement, wide body candles confirming above the previous day's high. That's confirmation too on a bullish retracement. It's just a matter of, again, kind of ranking him here. I'd still take the CBOE with the breakout of 102.50, but I do like a retracement with an engulfing candle here on ICE with the close above the previous day at 80.50. The one on the CME Group just looks way too volatile to be able to get a clean entry there.
Yeah, Chipotle.
You got cleaner entries on the other two.
Take a look at Chipotle Mexican Grill, Matt. It's been on our watch list for a while now. We've even had it on the option report many, many times. Now hitting a high basing pattern, running on a day where the market's down. So you have relative strength here, and now you're approaching that resistance point. Pretty interesting high base up here.
Yeah, the most overvalued burrito company in the history of mankind is giving you another clean signal above 721. The sucker just likes to run, man.
Yeah, they have. They have 100 PE ratio.
It's so stupid. It's so dumb. I'm serious. At the top of the market, things get so stupid so fast.
I mean, they do 4.87 billion in sales last year. That's interesting.
That's fantastic.
Yeah,
fantastic. Walmart did 140 billion.
You don't believe in the 100 PE ratio?
No, I don't believe in buying 100 PE ratios type stocks. I don't think that's a winning proposition long term.
But you will trade them,
Oh, no,
correct?
there's
There is a
a big
difference.
difference between trading a 100 PE ratio and investing in a 100 PE ratio. We'll trade 100 PE ratios all day long. We don't care about that. But if you're looking at it from an investor perspective, yeah, you gotta think about valuation. I saw some guy on Twitter said, "Oh, I haven't looked at a P ratio in 20 years." I'm like, because you're not a real investor. That's why.
Hmm. A lot of the weakness, actually, the broad-based weakness is happening in the market, but real specific weakness in chip makers as well as casinos and anything to do with international plays. Deere's down 5%. Stanley Black and Decker is down 4.5%. Wynn Casinos is down 4%. Give me a quick peek at Wynn, if you would. WYNN. We've talked about this. Whenever there's trade deals or China volatility or whatever it is, the casinos can take it on the chin because these are international plays,
Because
Matt.
Wynn has business in Macau.
That's right. That's
Let's
right.
not make it difficult.
Yep.
Anybody, when you see these types of headlines, it's the companies that do business with China, it's the companies that do business with the Eurozone, it's those types of businesses that are going to get hit the hardest,
Hmm.
and you're going to see that. We've seen it across the board. We've seen how these on the positive trade wind type news days, you see these companies explode in value, and the same thing happens on the downside. When we have I mean, we've talked Chinese versus US how much in the last year, Tim?
Oh, like at least,
Every day,
yeah, every
right?
day.
And I
Yeah.
know it gets to the point where it's like, oh, let's talk about something else. But you got to be aware of these things, because when these things change, I mean, it's going to impact price.
Yeah. Chip makers, semiconductors, Matt, AMD, AMAT, Micron, all of them, they're all moving here today. Give me a look at,
Let's take a quick peek at a lot of these. AMD, nothing to see there. Covered calls, naked puts, credit spreads, nothing to
yep.
see. Directional perspective though. INTC, that just looks ugly. That just looks ugly. But keep an eye. I said this last week before I went to speaking for Legacy. $50 is going to play a role on Intel. That is absolutely going to play a role on Intel. It was major, major, major resistance for a very long time last year. Coming into this year, it's now starting to fade as you get a little closer into that $50 range. You see that subtle change in volatility. You see that subtle change in intraday support levels starting to hold. You've dropped this down into a weekly chart here, Tim. You can see the kind of the slowing momentum of this chart. You see it come into that major, major, major resistance right there at $50. You got a slowing momentum candle right here, followed by another double bottom type scenario right there. Keep an eye on $50. If $50 holds, it could be an opportunity there.
Yeah. I agree with that. A lot of Intel, that weakness on the earnings is bringing it back into that 50 mark, which is key. Let's move on to the Dow Jones, if you would, kind of on that note, bringing in a Dow component. Let's talk about a few of the more Dow stocks that are grabbing my eye as well. The YM contract. And I do see some interesting questions in the chat. So once you bring this up, I want to answer a couple of these ones here. Stephen Johnson, great question here. Asked Matt, when stuff like this happens, are your suggestions around a watch list that we created this weekend? What are your suggestions around a watch list that we created this weekend? Looking at the tackle trading options and stock reports on the bull side, should we drop entry points, new buying opportunities, reset triggers?
Not on every one of them. Not on every one of them. But if the opening prices change and they break those support levels where we're indicating where we should be placing stop losses, you got to update triggers. You got to update stop losses. No doubt about that. I mean, when you're looking in that scatter report meeting and you're projecting from a technical perspective, 2.5 days in the future to a certain extent, and then you have major news coming out of the weekend where it certainly does impact where those triggers would be and where those stop losses would be. Absolutely 100%. You have to update your watch list. You got to do your job as a trader. You can't just rely on somebody else's information from 2.5 days ago and say, oh yeah, everything's going to be hunky-dory today. No, on some of the triggers, no, it's going to be perfectly fine. But on stocks that we're retracing, stocks that had bullish retracements type scenarios, yeah, you're going to have to update on bullish retracements. You're going to have to update on bearish retracements, no doubt about that. But on breakouts, no, you shouldn't have to update that much when it comes to the breakout. Take a couple of examples here from the report here this weekend. Now, Tim, when you're looking at this kind of on the CME Cummins Group, you had triggers most likely above that higher level of resistance here, Tim. And so you wouldn't have to update that. Maybe it doesn't trigger today or tomorrow. Maybe it triggers on Wednesday or Thursday, but that's still a legit trigger on CMI in CMI because it's a nice little breakout pattern. When you're looking at Lulu, for example, Lulu, another stock on the report. High base type situation, gap down on the morning. That should not impact the Lulu in any capacity on the triggers, on the stop losses, or so on and so forth. When you're looking at Netflix here, another stock on the options report here, yeah, gap down. It's holding that 9 EMA, but we weren't looking to buy on the 9 EMA. You're looking to buy on the breakout of resistance here. That doesn't change that one either. When you're looking at UNP here, same type of situation. When you're looking at a marketplace that was breaking out, the majority of the stocks on those reports are going to be type of breakout type scenarios, and so you just got to wait for the market to respond and stay true to the trade. So on a lot of the breakouts, no, you don't have to update much on breakouts. You just got to wait for it to break out. On retracements, yeah, you certainly have to look at it a little bit different on your bullish retracements, on your bearish retracements, and update your triggers. So for example, here today, you're looking at UNH. Nice little bearish downtrend, nice little bearish retracement. I don't know exactly where the triggers were in the for UNH, but I'm willing to bet it was underneath that low.
Yep.
So
that's right.
So I mean, it's just most likely not going to trigger. So yeah.
So most of them no, but like there will be some. There will be some, like a TROW. TROW, I think is.
But don't make the assumption.
Yeah.
Right. Don't make that assumption. Go in there, look at the picks, look at the watch list, and do your job as a trader in assessing those intraday levels.
Yeah.
And if you don't know how to do that, I did an hour-long stock report from a week ago that showed everybody how to do it. So go review the stock report from last week and update it to this week.
Yeah, you got to build your skills, because not only on a Monday, I mean, by the way, this happens every week, day by day by day. Patterns can adjust and change. Sometimes the trigger stop entry is all going to be the same, but sometimes you have to adjust your skill set and also your identification as the patterns are changing.
It's a great question, though.
I love the question, and great to have you in the halftime report here. Back on the Dow, if you would, Matt. Only 5 Dow components are going up here today: Chevron, Disney, McDonald's, United Health, and Pfizer. That should tell you all you need to know. All the conservative companies are showing some defense here. They're actually up. Dividend payers and energy and things like that. Chevron, actually not a great pattern, neutral at best.
Yeah, we downgraded the energy space and the basic material space this week as well, as a response to what we're seeing in the sector and what we're seeing in the individual components.
I love this pattern on Disney. Unfortunately, they have earnings on May 8th after the bell, but man,
it's
what
beautiful.
Yes.
It's beautiful. You know what though, T? It's going to be beautiful for a long time with Disney though.
Yeah. What's the MMM projection on this one?
4 points off 130, about 3%.
Oh, that's an interesting MMM projection. I'd have to go back and look at the volatility. Yeah.
Usually we would not cover Disney on earnings.
Oh, if you're long equity, I would cover. Yeah.
I'd cover now though, right?
Yeah. After that huge run up, I think you take some of your profit, you pay the insurance, you take the risk out of the earnings. Well, absolutely.
You write a call.
Yeah.
You write a call, maybe a 30 delta call, to bring in a little bit of cash flow, give you a little bit of growth here. You use some of the portions of what you've been doing over the last 30% up in the last 2 months, and you protect your investment, right? That's not a hard decision. Would you agree?
I agree. I actually think it's pretty easy
coming into earnings. You take out, you write a 30 delta call option to give you some growth because it's Disney. You buy a put option to protect the short term. Yeah, I think it's an easy call on Disney with what's happened over the course of the last month and a half.
Even though Boeing is not the biggest company in the Dow Jones, did you know that it's the highest weighted company on the Dow Jones Industrial?
Yeah, I actually am a little surprised by that. I mean, there's some big companies on the Dow.
I mean, Apple's bigger, but they put more stock in Boeing because of its composition and what it represents for industrials. BA, if you would, is pressing support here, Matt. They've had interesting stuff going on. I was looking that up yesterday.
I said for 2 months now, Boeing has not been transparent, and Boeing needs to be more transparent. Did you read the headline that came out yesterday, T? Boeing knew about the problem with the alert system that was the issue with both those plane crashes for months in front of the problem. They were basically lying to their buyers. It's not good. It's not good. This is still, I know it's a bad joke, no fly zone.
Yeah, I definitely listen. What a tragedy. And that's not the kind of thing a company like this needs to do to put confidence in the investor public. And by the way, we give them as citizens, even a lot of leeway here, Matt. They had a lot of things that they were taking advantage of that probably they're going to have a lot more oversight.
Tim, if this was any other company not named Boeing, they would have a lot more heat on them. But people love Boeing.
Yes, they do. Yes,
America loves Boeing.
You know, some interesting pullbacks here on some of these Dow components. We'll talk about them, Matt. I really like this Microsoft pullback, actually. Coming back to the 125 zone, we had it as a potential candidate. We ended up disqualifying it because of the complexity. The deeper it pulls back into those moving averages, the more I might like it.
I could understand the reason you wanted to take it off, because the trigger was going to be difficult on there. The reward to risk ratio wasn't going to be good unless it was a breakout. And how many times do I have to say it? 2 days doesn't make a retracement.
Yeah. I'll tell you what is in a retracement right now is Home Depot. Deep retracement actually reminds me of the last time it had a pullback in late February, early March, just like this. Pay range is very similar. It's not quite as long in scope and time. The only issue, Matt, is earnings about 2 weeks out. When you get a deep retracement like this, there's a lot of times you'll play like a swing trade that's 14 days out. Does it impact your thinking when you've got earnings within that window like that?
No, you got plenty of time if you're looking at this as a potential trade. I am not. Home Depot, if you like it, if you like the retracement at 199, you're going to like it a lot more at 195.
Yep. That's right. Move on to the NASDAQ, if you would. NQ contract. We're going to keep working through the markets one at a time. And by the way, welcome out halftime crew. On a Monday, always working through things step at a time. The halftime report is a way for Matt and I and Cody to come in here and just kind of work through our daily routine and process. If you're a new trader, great to have you. If you're a veteran, halftime crew, is always great to have you as well. If you are new, give us a quick thumbs up and a like, and subscribe to our channel. NQ Matt is probably playing the most defense here, red candle, but I got to tell you, it is riding and riding and riding that moving average. What's your read?
Nothing to see here on a directional perspective on the NASDAQ until it breaks out. You got to like the fact that it's riding those moving averages, no doubt about that. But this is really slowing down here, Tim. Whereas you got this retracement coming down in between the rising moving averages here, that's not what's happening here. This isn't retracing. Those moving averages are catching up to a high base scenario within the NASDAQ here. The trade is easy. The analysis is really easy here on the NASDAQ. When you drop this down into that 30-minute chart, you're going to see that top channel right there, coming in close to right there. You got to wait for the breakout if you're going to do anything aggressive on the NASDAQ.
Do you think there was a tick at 73.08, or is that bad data?
It's a misprint.
It's got to be a misprint, right?
It's a misprint.
If some computer got one trade in at 73.08, I would be impressed. There's no doubt about
it. That was not a person if it was, T.
No, right? No, it was not
a person, because when you're looking at this on that intraday, dropping down to that 5-minute chart, that's before the market actually opened up, T.
Yeah, that has to be a misprint.
That's like the 5 minutes before the market actually opened up. So no, that's just one of the ones when you're looking at like, did the market just flash crash?
Yeah, it grabs your attention. I don't care who you
flash crash.
Grab your attention.
Did I just see a like 7% downward movement in price in 5 minutes in the market? Are we repeating March 10th of 2011? I get it, but
May. No, it was in May.
It was May.
It was in May. Yeah.
I usually have my dates on, no doubt.
It would be about 8 years from now. 8 years ago, yeah.
Yeah, you remember that day though?
Oh my God, I'll never forget
it. Yeah. Oh wow! Yeah. I mean, as an active trader, and you're watching a 10% movement in the S&P in like literally 5 minutes, you're thinking the end of the world is happening, is what you're thinking.
Right. No, exactly. I mean, I remember.
Did we just drop a nuclear bomb somewhere? I mean, literally. I mean, that's what it would take to drive the market down 10% in that short a time frame. But no, that was not it. I don't have that as actual price action.
And if you don't know what we're talking about, read the book Flash Boys by Michael Lewis. He talks about the flash crash and the automation and the algos and all that kind of stuff. Great book. We also did a podcast on that book. It's on our old book club podcast on our website, tradingjustice.com. And by the way, the new newsletter will be out shortly over on Trading Justice. So make sure you go onto the website. We're cutting a podcast as well.
Mark's doing the sell in man go away if there's some legitimacy to it, I believe.
Yeah, I think so.
And
defense.
You know what I love about Mark's writing, though? He's a great writer, but I love his analysis on it because he will dive deep into it.
Sure. Yeah.
I mean, have you ever met an individual that dives deeper into data than Mark does? and not only does it, but like geeks out on it.
Yeah, I
Like
met a couple people like
that's his
that, but
happy spot, right?
mhm.
Like my happy spot is the 12th green on at the Masters. That would be my happy spot, right?
You know who's like that, Matt, is Carl Hoffman.
Carl
Who,
Hartman reminds me a lot of Mark.
yeah,
Yeah.
yeah. And if you don't know who Carl is, I actually did an interview with Carl on our Traders Take 5 videos on Trading Justice's
Carl,
website. It's in our blog. And he's very data driven like that as well, you know, and automation and all that kind of
and
stuff.
we like and respect Carl so much. He's one of the moderators over there at the clubhouse too.
That's right. That's right.
It's a
Yeah.
great job.
NQ is fading here late in the day, Matt. We've got 2-3 hours left now.
Little concerning here,
I'd
Tim.
be concerned.
Little
Yeah.
concerning here. You just broke down out of an intraday support level why we've been talking in the last 15 minutes. Trigger underneath that 77.50 level. I see some intraday right here at 77.36, but you really are coming back down to that 77.20. If you don't come back up, if you don't reclaim 77.50, the most likely spot is 77.20.
Yeah, but 25 points down, 25 points up. I think you might have like a mixed reward to risk here in terms of where it's going to go. Yeah, for sure. I mean, I'm actually very impressed with the defense. Obviously, fading here out. We're going to keep watching it throughout the day, and obviously up until the bell, there's no doubt about it. If you sold off hard, I would have a different read on this whole thing. As of now, that rally off of the cash open is very impressive. Look at some of the big FANG stocks, Matt. Amazon. I mean, Amazon opened up at 1910. It's all the way back up to 1940. You know, and Amazon. That's just in an uptrend. I mean, it held a lot of the gap. It's only down about 20 points off of this whole thing. That's 1%. You know, 1% on a day where the market was down 2% intraday last night, literally at the futures open.
Yeah, but they ruined a real good trigger.
I know. Yeah.
This is why I get passionate about what we do and why I get upset about market manipulators, because that was a real good trigger.
That's right. Yeah, breakout trigger was fascinating.
No, you have your confirmation with the breakout. Yeah. The trigger's above the high, and the gap down out of the international news. You got to kind of reset it.
Yeah. Yeah. Other defense here. We already looked at Microsoft. Look at Apple Computer. Apple Computer opened up today down about 203 and literally instantly rallied back up to 207. It hit right on the 20 period moving average and then rallied right back up into the 9 period moving average. It's interesting. I mean, I still love the upward movement. I like the bullishness of this stock. It's been a market leader. If the market does come back, I think there will be opportunities in Apple. But the hard thing with this chart,
it is. Finish your thought, because I think you and I were about to say the same thing.
The hard thing is, Matt, it's a mess of a chart because you got gaps everywhere, and now the triggers are going to be very difficult. It's almost like you have to go down to a different time frame to trade this one.
You have to drop it down to intraday. You know, and I can't remember who asked me the question, but they said, when you're looking at something like this, where do you trigger? And I said, can't look at it like that, because if you're looking at, take Apple right now, if you're looking at an Apple like this, there's nothing to see here from an overall trend perspective, because you got the gap coming out of earnings and you got the gap coming out of the international 4 days later. It's thrown off all probability from a daily chart perspective. To be able to do anything here, you need to drop it down from a daily chart. You got to drop it down into a 30-minute chart. And what are you seeing here? Gap down, retracement back up into resistance, fading action coming out of that. There's nothing here on the daily until you get back up above those intraday levels of resistance and reclaim, say, 208.50 or maybe even 209, and then we're talking here. But when you're looking at this from an overall daily perspective, you're like, oh, I'll just buy it off the 20. That's fantastic. Well, then you drop it down to the 30-minute chart, and I'm just seeing a bearish retracement on the intraday chart right now.
Yeah, it's kind of what I'm seeing as well. Let's move on to the RTY if we could here.
Showing relative strength.
It dang well is. I mean, it broke out on Friday. By anybody's definition, it was a breakout. It closed all the way up at about 16.13 or something like that. It was above all pivot points on a close and on volume. But then this whole news, you
didn't gap down like the other indexes.
It did not. It's showing me some strength, Matt. What do you think?
No, I mean, if you're looking at this from an international perspective, a geopolitical perspective, I mean, Tim, think about it. Think about the headlines we had coming out of Saturday and Sunday before the futures market opened up on Sunday night. Oh, Trump obviously threatens a 25% increase in tariffs on China coming in this Friday. I don't understand that, to be honest with you, from a negotiator's perspective, unless he's just so set on getting a deal done this week. And maybe he's trying to put a little pressure on China to finalize the deal this week. I don't get it. But again, that might be something that's playing a role here with that. China threatens just to walk away. Okay, so that happened Saturday, Sunday. But Tim, you also geopolitically had rockets in Gaza. You have a U.S. Aircraft carrier going over into the Middle East, in specifically just to say hello to Iran. You have North Korea testing missiles again, and then you have massive concerns about Venezuela still. You have massive geopolitical situations happening across the board around the world right now, and that's not even talking about the problems economically in Europe and Japan and China specifically. So you see those headlines geopolitically. Guess who doesn't have that type of risk geopolitically? Small U.S.-based companies that sell most of their products to U.S. consumers.
Yeah.
Right. So when you're talking about these type of indexes, and you have the S&P 500, and the S&P 500 is chock full of companies that are 10 billion and above companies that sell massive amounts of products and services and goods to the rest of the world. When you're talking about the Dow Jones, every stock in the Dow Jones sells, I think on average, 50% of everything they do from a revenue perspective is countries from around the world buying their products and their goods and their services. When you're looking at the NASDAQ 100, the NASDAQ 100, those stocks have tremendous risk to specifically China. Tremendous risk to specifically China. And then you have the Russell 2000, which is full of $2 billion companies, $5 billion companies, $8 billion companies, companies that are less than $10 billion, and they're not at that level where they're selling a majority of their products to people from around the world. They still sell a majority of their products to people that live in the United States. And so as that goes, they're not going to have as much risk exposure or return exposure as well. It works both ways, both return versus risk, to the same scale internationally that some of the larger scale companies do. And that's why you see a little bit of a relative strength here. I mean, you're talking about the NASDAQ and the S&P both down 1.5%. The Russell 2000 gaps down, I think 10 points. It was like less than 0.5% gap down. Responded a little bit on the intraday futures market, but then started responding more bullish quicker than a lot of the other indexes there. And you see that same thing occur here, Tim. That's not real, but you see this kind of gap down. And unlike the S&P and the NASDAQ that kind of came down underneath those intraday levels here, the Russell 2000 really held that 1580 mark, created a neutral environment on that intraday between 1580 and 1592. Once you broke out of that level, you broke out of that level 2 hours before the cash open. The rest of the market did not do that. It did not respond bullish until the cash open. You break it out again on the cash open right here at 7:30 in the morning, my time, 9:30 a.m. Eastern Standard Time, and now you have a standard bullish uptrend from an intraday perspective with an intraday support level. If you're looking at day trading right now, I'm bullish on the Russell compared to the other indexes from an intraday perspective.
I agree. I mean, there's really no other way to shake it out. If you look at it, we're just based on the percentages and the analysis and everything you just broke down, it's got relative strength right now. And there's a lot of reasons technically and fundamentally why that's happening.
Can I ask you a question? Okay. You're a cash flow expert, and especially with condors, cash flow condor.
Yep.
Right. That breakout of 1600 is legit in both of our opinion. Agreed? Correct.
Yes, it is.
I mean, it's not legit in the same that it was Friday. Friday was extremely breakout, extremely bullish, but you got to love the resiliency of the Russell 2000.
Sure.
Let's say you're short 1650, long 1660 condor.
May.
Yeah. Would you cover?
What would I do?
Yeah, what would you do?
Oh, I would just take the bear call off. I mean, literally, I wouldn't even hold that risk. But I manage my condors a lot more actively than most people manage their condors. It doesn't mean that what I would do is right, by the way, Matt. It's just I have a much more active management philosophy and style because I refuse to ignore a technical signal that I see.
No, I get that, but you're still 2 ATRs away from that level.
I would just, listen, it's bullish and you're too close. For me personally, especially with the fourth quarter volatility last time, I've just changed my style on that. I'm pretty laissez-faire until I see something like that. I've had a plan that if it breaks out, I was going to cover the bear calls.
It would be an individual decision, obviously. But I personally would not hedge May. You're still over 2 ATRs away from that. You got 10 trading days left in the month. Obviously, we have already seen what's kind of happening today. So you got really kind of 9.5 days away. You're again 2 ATRs away. The market's showing bullish behavior coming out of the gap, but you still did gap down.
Yeah.
And if you're 1650, Tim, that's still a 17 delta contract.
Correct. What's the probability of touching though?
Probability of touch would be more like, I don't know what
25% probably. So
30% at max.
Right now, the midpoint on that May 1650, 1660 most likely is going to be about 180 and 380. So about $2. Let's say that you got an 80-cent credit. You can take a $1.20 loss. The thing about condors, when you look at the equity curve over a long enough period, you can't micromanage everything, right?
We said 30%. It's 32%.
32% probability of touching. So yeah, Matt, listen, it's to each their own. I mean, there's an 8-hour course and there's a lot of management styles, a lot of ideas. We do a mastermind group every month for a reason. Even people who've been trading the system for a long time. Last year, I had Coach Tyler and Coach Emily on the podcast, and the three of us were talking about this. 3 people who've traded condors for years. Tyler, he's the architect of a lot of the videos. Him and I, we've been doing this for a long time. You've been trading condors forever. And we all had different answers to that same basic question. Well, Emily does nothing. Right?
Emily trusts the number. I mean, she trusts the number. I mean, if she'll have a contingent close at 1650, and if it goes to 1650, she's going to take the loss. So if it touches, she's taking the loss here. Other people will hedge it. Other people will buy shares of the IWM. 25 shares, 50 shares, whatever it is.
Delta hedge,
like a delta hedge there. I just think with only 10 days left, I think with still 2 ATRs away, 17 delta, 32% on the probability of touch, you still got probability. You still got probability on your side here. I wouldn't hedge. Now, if I was looking at 1650 in June, let's go down and see those same numbers. If I'm looking at 1650 in June, that has a 62% probability of touching, and I'm definitely hedging.
Mm-hmm.
That's just a different, but it's a different evaluation though, right? You got 45 days versus 10 days. You got a 17 delta versus a 34 delta. You got a 32% probability to touch versus a 62.76 probability. So you got different scales here. And so if in June I probably would hedge, May I wouldn't.
Yeah. Whatever it is you're going to do, don't trade with emotion, trade your plan. You should have planned this at the 65-day mark when you built it. You can't just play this by the seat of your pants. I mean, you have to.
I would be very, very, very shocked if anybody in our community has a 1650 contract in June.
Yeah, no, June would be up in the 1700s, I'm guessing. Yeah. All right, moving on to the dollar index, if you would, Matt. Listen, this weekend I did the Forex report. We've got the dollar still rated very strong against most other currencies. There were some interesting moves, though. I want to get your take on the pound at some point. First off, break down the dollar.
Very volatile, very crazy right now, very news-driven. Little surprised that with the geopolitical situations from around the world, the dollar did not respond more bullish. I'm a little surprised by that. When you're talking about geopolitical risk, the two currencies that have been the most safe haven type currencies, the Japanese yen out of the Asian peninsula, and you have the US dollar out of the West. So a little surprised with the geopolitical concerns that we saw here over the night that the dollar did not respond a little bit more bullish, especially sitting there at that 97.50 handle, which is a very, very important number for it. You're still bullish on the dollar as long as you stay above the breakout channels. And the breakout channel, somewhere in that 97.30 to 97, 60, 97.70 range. Those are kind of your breakout channels in that, 30, 40 pip zone. You're bullish at that point. You're looking for triggers on the top side. But I'm a little concerned. The Friday price action on the dollar was something that I was a little surprised at. I thought the dollar would have responded a little bit more bullish coming out of a very positive economic report coming out on Friday. But it didn't do that. But it did hold its support level. It is trying to play defense here. There's no swing trade here coming into today. But let's see how it plays out as the week progresses here. Because as long as you stay above that 97, 50 type level of support zone, you're looking to be a buyer here on the dollar. It's just a matter of which cross pair you're looking at it off.
Well, and I'll tell you, I mean, the Aussie and the New Zealand dollar continued to remain weak, but the pound and the yen, Matt, actually are moving more in what I consider to be a neutral condition in many regards. I mean, if you look at the pound dollar cross pair, It's neutral. I mean,
100%.
it's neutral, and then the yen as well. I mean, the yen is up a little bit here today. It's got a nasty red candle with a tail on the top, but pound and yen here, Matt, break them down one at a time and kind of give me your analysis.
Well, I mean, the break of 130 was a great trade, and it triggered and was a successful trade. And then it retraced back up into that 130 handle, as you can see right here, started slowing down at about 130.15 in that range. Little double top on the intraday right here at 103.80. And then you were expecting another trigger coming underneath that 130, but it just didn't do it, Tim. I mean, the market responded coming out on Friday, very bullish about on every currency against the dollar. It broke, and when you see that type of pattern right here, let me kind of fade in. When you see this break back up, you're now dead on neutral again. There's no swing trading, no swing trade set up here, and there's no swing trade set up here on the pound for probably next 2-3 weeks.
Yeah. I mean, reaction to the numbers, the PMI numbers on Friday, as well as the jobs report. First of all, lowest unemployment rate in 50 years. I know that it's an artificial number, but it still is quite impressive if you ask me.
A positive number. I mean, we had 105 consecutive months of job growth.
It's pretty incredible, actually.
Even the hardest naysayer, skeptic, doomsdayer can't deny the fact that a 3.6% unemployment number with a GDP of 3.2% is a really good economic condition. And just for the Trump's Treasury cronies and goonies out there,
I can give it a try.
We don't need an interest rate decrease.
I could play devil's advocate and give it a try. Gig economy. Nobody's got any savings anyway. They all spend all their money. It's a consumer-driven economy.
Right. To Montana.
New Zealand dollar, Aussie dollar, they're all kind of fading lower as well. Let's take a look at the commodity.
Trade on the New Zealand dollar.
I like it. I really like the breakdown. Weakness there on the Aussie and the New Zealand. We were downgrading some of them.
Above 135 on the CAD. Keep an eye on that. You're retracing on the Swiss franc, but there's no trade really kind of to look at there. And on the Japanese yen, this thing just is going to be kind of that. Oh, that one's hard to read when you got two safe havens and they don't know what to do against one another.
Yeah, it's kind of tough. Right there. Moving neutral to me. And by the way, I did the Forex report this weekend. If you are a pro member at Tackle Trading, somebody in the chat just put in Forex report. Go and take a look at it. I actually did a deep dive on interest rates and central bank rates.
Tim wants to be able to brag next week when we go through our data.
Go watch my report.
And when Tim's report has more hits than me or Keith's Forex reports, he wants to brag. Okay, so let's help Tim a little bit, brag away. So go out there and click on the Forex report, so Tim can have a little bit of a, hey Matt, I did a better report than you. Look at me.
It's called promotion, Matt.
Yeah, I know what you're doing. I did the same thing with the stock report last week. You don't think I want to brag tomorrow?
Yeah, we'll see what the number is. I don't know exactly.
Hey, if you have not, since we're all, it's about me, Tim. It's about me. Okay. So help me hit a record on the stock report, guys, from last week. We don't care about this week's report. We just care about last week's report.
Oh my. Oh my. All right. Crude oil, Matt, playing defense here at 60. I actually did a little video for our Instagram feed. And by the way, if you are on any social media, we're here on YouTube, but we do a lot of stuff on Instagram, Twitter, and Facebook. We've got a LinkedIn page. If you're on any social media, make a note to go find Tackle Trading on those social medias and like them and follow them. Matt, the question I threw out there on Instagram was this. I mean, where do you think it's going to go from here? You've got a more complex pattern than we've had all year, in my opinion, because of the depth of that retracement and the size of those red candles on some of the volatility. We're hitting the 50. We're holding 60. You've got a case for the bulls, but you've got a case for complexity too. What's your read?
I'm kind of excited.
You like it?
I'm kind of excited. And the reason I'm kind of excited here, hey, hold on real quick. Look in the middle of those white things where my computer is. Yeah. Hey, when the wife asked me a question, I'm going to respond to the wife. But when I'm kind of getting excited here a little bit to kind of reclaim my own thought process. First and foremost, 60 is major support. It's both significant whole numbers. It is right where that kind of that zone of that 50-day moving average is. You also have a resistance right here. You saw the resistance level at that 60. That breakout was such a clean breakout of that. And literally, that's not a person buying that I mean, the low of today is literally 60.04 here, Tim. So I'm sure you had some computer algorithms programmed to buy that if it ever got to that level. You respond bullish coming up on the hammer candle, real good hammer candle. And I also see a fairly clean trigger here, Tim. If I drop this down into that 30-minute chart, you got that 62 level right there, but you also have an intraday level of resistance right there at about 62.50. And not only that, as we're talking, it's breaking out of a high base intraday, right? And you're breaking out of that high base intraday. That's a trigger right there if you wanted to be aggressive. A little bit more conservative trader would say, okay, let me reclaim this level of support right here at 63. So you do have a trigger above that 62 mark that we just saw on the intraday. A little bit more of a clean trigger would get back above 63, but I am kind of getting excited for what I'm seeing on crude here.
Yeah. If you like deep pullbacks and if you like an uptrend and a risk-on environment, let's call it like it is, Matt. If the market goes back up, crude oil most likely will go back up as well.
Tough pattern to trade, though.
It is a tougher pattern, though. There is complexity in that pattern.
I mean, here's the problem, Tim. You buy above 62, you got to worry about 63. You buy above 63, you got to worry about 64.50. You buy above 64.50, you got to worry about 66. You buy above 66, you got clear selling to the top side. But that's not going to happen in the short term. If you're trading crude, you have to have a day trader skill set right now. Even if you're day trading to enter into a longer term position like a swing trade, you still need day trading skill set.
Yeah. I actually kind of like the idea of a call ratio back spread here now that I think about it, because if the pattern fit, I don't trade them very often, Matt. I don't like to go to the fancy stuff when I don't have to, but I like the idea of some risk control here on the depth of that pullback.
I get it. There's lots of conservative ways to trade it. No doubt about that. You could just go sell a 3 delta naked put on the futures market.
No chance. That's not going to happen. Natural gas down here healthy today. Old resistance, new support, or old support, new resistance, I should say. This is a kiss goodbye type pattern in that regard, Matt, but it's been in a downtrend for a long time. You've got just a slowing down trend, but it's not strong at all. Are you bearish or neutral on that thing?
What? Is that a question?
Mm-hmm.
Am I bearish? Yes, I'm bearish.
Or neutral. I like bearish as well. I think it's definitely in a downtrend.
That is a bearish retracement. You set a lower low at 2.43. You're sending a lower high right here at the levels of resistance that you've clearly established at 260. You drop this back down into that intraday. You see that 2 level right there? You broke that level. Yeah, there's no buy side mechanic here on natural gas.
A day where there's a threatening of tariffs and the market is selling and gapping down and gold is up 0.16% tells you a lot about the attitude around gold.
To answer Marie's question really quick, nothing is wrong with a 0.30 delta on crude. Nothing is. It's perfectly fine.
Just not my style lately, Marie.
It's not Tim's style.
No, I'm not taking on
nothing wrong with that. And that's Gino Poor 101 crude oil trade. Hey, when in doubt, sell a 3 delta.
I get it. I mean, the idea, but it feels like you're walking into traffic to pick up pennies, and maybe you feel like you've got all the room in the world before that car is coming down the road. But I just don't see the need to take on unlimited risk, Matt. That's a personal perspective.
It's your style.
It is.
What about an 8 delta bull put though?
I'd be more interested in that. There's no doubt about it. There you go. Just different
technique,
different strokes, different folks, right?
Yeah,
it
really?
is what it is.
Oh, okay. I don't think that was on the tackle trading bingo game.
That's not on bingo card.
That's not
all
on
right.
bingo card.
Yeah.
But yes, I'm bearish on natural gas.
Why is gold not going up more? The market has risks, there's threats, there's all kinds of stuff going on. It should have rallied on this news, Matt. Gold bugs have to be upset with the lack of conviction.
Gold bugs have been upset since they were born.
People are on the sideline.
Something else.
That's the only thing I can think of.
The market responded bullish coming out of cash open. The dollar's hugging support levels. The gold's not going to respond ultra bullish with the dollar sitting at support.
Yeah.
It's not going to happen. If the dollar breaks support, if the dollar breaks support and the market shows some weakness, gold should rally. But Tim, even if gold rallies above 1290, you're not a buyer. If it rallies above 1300, you're not a buyer. I mean, you already own it. So I mean, it's just a matter of what would have to happen for you to actually buy something. I don't know, guys. I'd be honest. It might be months for me.
From a trading perspective, it's not looking good. I mean, there's not a lot of clear patterns or signals. I'm sure you can day trade it, if you're a day trader in gold and commodity.
You day trade anything. And that's why I laughed when you said call ratio back spread, because it's like when you have the trader skill set, you can always find an edge, but it doesn't mean you should do it.
Yeah. Yeah. Palladium's about to press support again here, Matt. Dollars at support, palladium's at support. We've talked about this one a lot in the last year and we really liked it, but that's not a good looking pattern. I mean, that's kind of a bear flag developing down here, as well as some support at 1300. Break below 1300 and you've got lots of room to the downside.
Like a break below 1300 and it's a stone throw from 1200.
Yeah.
I mean, that would be a very, very negative sign for palladium to break 1300. Extremely negative.
I agree with that. And last but not least, I want to take a look at Bitcoin, actually.
Platinum forming a bearish retracement, by the way.
Mm-hmm.
Oh, you want to look at Bitcoin, huh?
I do. Talk about defense. I mean, wow, Matt.
Yeah, more of a safe haven than gold, apparently.
It's been safer lately. It's been bullish. There's no doubt about it. In fact, a day where the market.
I want to ask the group something. What would you guys think of a crypto report? Maybe not once a week, but maybe like once a month for the pro members. Nice little detailed crypto newsletter for the pro members of Tackle Trading. What do you guys think? What do you think, T?
I'm interested. I mean, I'm obviously bringing up Bitcoin more and more recently for a reason. I mean, the charts are interesting. Ethereum and Ripple and all of them have always grabbed my attention now for several years. Yeah, definitely. I think it could be an interesting value add. There's no doubt about it. The thing about crypto is I think a lot of people are intimidated. They don't know how or where or even the basics of how to get started, right?
It's how. It's the how. Mm-hmm. It's how do you trade Bitcoin if you don't know futures? Right. Mm-hmm. And there's a lot of ways to do it. Okay. All right. Well, I'll look into it, guys.
Yeah, for sure. What do you think of the overall market conditions here, Matt? I mean, as we're heading into the end of this day, I do want to do a quick not a deep dive, but a quick review of all the sectors, just kind of talk about the rankings. And as we do, I mean, just the overall thing, I mean, it's playing defense, it's showing strength, 29.21. We're only down 1%, 1.2. I mean, something like that, 0.9% at this point. Pretty impressive.
It's playing defense, no doubt. Yeah. Market's showing resilience. I mean, if you had to pick right now, and you just give, say, 29.23, Tim, above or below by the end of the day?
Above the short-term trend, the intraday trend.
It's got to be above. The S&P has held its support levels at right here at 29.15. On the intraday, the Russell 2000. Let's quickly look at these indexes very quickly. The Russell 2000, off that retracement I talked about, has now responded back up with confirmation. You're looking at the NASDAQ, which was showing some weakness just very, very briefly here. But if we drop this down into that 30-minute chart here, Tim, look at that nice little retracement. Look at that upward movement in price. You got to say the market's going to ramp coming into the close.
Mm-hmm. Yeah.
So that's kind of my read on the intraday. Looking at the sectors, let's drop this down and take a quick peek at the sectors. S&P 500 ranked at the positive 15-yard marker. We kept it at the same from last week. The dollar kept it the same from last week as well, right there at the 25-yard marker. Slightly bullish rating on the dollar, and I think that was accurate given the volatility, but it was holding its support level. Looking at the aggressive sectors very quickly, guys, basic materials got a downgrade to the slightly bullish ranking of positive 35. That is right on the cusp of neutrality. If you were looking at this today, though, you would put that smack down.
It'd be downgraded. Yeah,
it would match energy. Mm-hmm. Is what it would do. Mm-hmm. But when you're ranking this, you're ranking it based on that, and you're seeing this support level, and you're seeing that upward movement in price. But if you were to rank that literally today instead of last Friday, you would put that at the positive, probably 45-yard marker, I would say. Mm-hmm. So even though it's at 35 right now, just assume that just got downgraded here at the halftime report down to that 45-yard marker. When you're looking at the energy sector, very similar to that of the basic materials sector, broke your support levels. I got this as a bearish short-term downtrend at this point, but we do have a ranking right there at smack dab neutrality, right there at the 50-yard marker. I'm very concerned with a lot of those energy stocks. A lot of them are in bearish type trends right now. So energy and base materials, you are really your two sectors that are dead on neutral here. Looking at communications, I like what I'm seeing in communications. We got it at the 25-yard marker, slightly bullish rating, but I do like this. It's playing defense here today, clearly establishing intraday support right there at 49.25. If you can reclaim that $50 mark and get above the Friday's close, Tim, look for communications to fly. If that does get back above the Friday close, that would also confirm above a very, very significant number at $50. So keep an eye on communication and communication stocks this week. Big Dog Disney does report earnings later on this week, though. What is it, tomorrow? Is Disney's tomorrow?
Wednesday, I believe.
Wednesday. So communication sector, keep an eye on that. Disney will impact the communication sector as well. When you're looking at the other three aggressive sectors here, industrial got the ranking right there. It's slightly bullish at the positive 30 mark. You're looking at a holding intraday support levels right there at 76.75. Keep an eye on that. But you also have a nice little 50-day moving average that is hovering right above, right below the price right there at $76. And if you can kind of look at this on this last retracement here, once that 50-day moving average caught up, it was kind of off to the races here. So keep an eye on how the market will perform on the industrial index. Obviously, Boeing's going to have a say in the industrial index and how it does perform this week. You got technology right there at the 15-yard marker, and again, looking at the high base type scenario here. Obviously keeping the ranking where you would downgrade it a little bit coming in off today's price action, though. You got to love the resiliency of the tech space. I mean, it gapped all the way down to 76.90, and now it's currently trading at 77.90. You've already reclaimed over 1% on the bull side off the drop that it had from last night. So it is showing a lot of strength here. I think kind of your trigger to see if this is going to get back up into this high base type situation. Let's see it get back up above 78. But you also have that consolidating 9 EMA. Let's see it get back up above that, and then you're in that high base yet again. Discretionary sector right here. Positive 10-yard marker on discretionary, still holds its support channel. You're looking at this more as a retracement type scenario here, but that has a positive 10-yard marker. It's not really the reclaiming of resistance that I'm concerned about. I'm concerned about this 118 level, and maybe not concern is the right word, but that intraday level of 118, now a daily support level, was an old resistance level, slight old intraday support level over here, confirmed it again yet today. So keep an eye on that. You might have some good retracements in the discretionary space. So keep an eye on those discretionary stocks that were retracing and holding support levels. And that, I believe that is it for the aggressive sectors. Very quickly on to the defensive sectors here. XLF Financial gap down, holding its high base. Nothing to see here for the financial space until it does in fact break out, and you have clear triggers above 28.15 on the financial space. So keep an eye on how that performs as it gets up into that level. Consumer staples, talked about it a little bit briefly. Love this sector right now, Tim. You had positive earnings coming out of this space here earlier today with Cisco's earnings as well as Tyson's. It just loves this moving average. It loves that bull zone. As you can see, anything in between the 9 and the 20 rising, that has been a good buying opportunity, and that's what we're seeing here today. That's what we saw a little bit last week as well. So keep an eye on the consumer staples XLP space. I like the trend I'm seeing in that one. XLRE, little safe haven status. I have nothing to see here. I know we had it ranked at the positive 35, slight upgrade coming out of the week at the positive 35. I believe it was 40 last week, and I understand that, but to me, there's nothing to see here. I don't have a slightly bullish rating on this. I would have kept it right there at about the positive 45 ranking, to be honest with you. You are underneath that resistance level. You came smack dab into a double bottom at 35. That is completely neutral in my opinion. I think it's a little bit of a too aggressive of a 35 ranking, given the fact that you're seeing a lot of neutrality in this space right now. So it did get upgraded based on the average coaches rankings in that scanner report, meaning 35. I'm willing to bet there's half of them at that 45 and half of them somewhere around that 30-yard marker, and probably a little bit safe haven type philosophy in there. but I think it's a little aggressive of a ranking. I have it as a neutral candidate right now, right at that 40-yard marker. And until it breaks out of 3670, there's nothing for me here to see until we actually set out and break out of resistance. Looking at the twin sister of real estate, utilities, very similar to me in utilities right there at that 40-yard marker. I got a neutral ranking on utilities as well. Overhead resistance at 59, underhead support at 57. And as long as it stays within those zones, you are just flat out neutral right here. Good dividend payers, good safe haven type stocks. If you're looking at some safe havens to kind of protect against the geopolitical situations, you can do far worse than a utility stock that pays you 3.5% or a REIT that pays you 4%. And that's obviously on the dividend. And then the last one here is healthcare, and healthcare got into that positive 45 level. I don't see it, to be honest with you, Tim. I still got a bearish ranking on this sector. You're underneath the resistance levels at 90. You're slowing down at 90. Obviously, there's no short here until you confirm underneath 88.45, but I still have a bearish rating on the healthcare space.
Mm-hmm. You know, love the breakdown, love the analysis. Always breaking down the sectors really helps me set my week, and it's why we do it on a Monday. By the way, if you're out there and you've not gone through the Tackled newsletter, and Cody, great job on this weekend's newsletter. Really appreciate the value you're bringing in there. Matt, all that sector analysis, all those stuff, they're all in there as well.
Keep an eye on those bullish breakouts, guys. A lot of those traders are
I
still
feel like
legit.
most of my analysis from the newsletter was negated Sunday, so thanks, Trump.
He did blow a few of those sectors out of the water, no doubt about that.
It does adjust things. There's no doubt about it.
You just got to update. But I mean, if you're looking at the cash open today versus kind of on Friday's close, I mean, you basically can say nothing happened. We're back to whatever Friday's close was.
You know, earnings after the bell here, Matt. AIG, Hertz, Pioneer, Mosaic, Occidental Petroleum, some other big names as well. Just go check things. Regeneron tomorrow, Denbury, Allergen, Lumentum, InBev as well. But a lot of the major earnings have already come and gone. Lyft has earnings Tuesday after the bell. Is going to be interesting after their IPO.
I am actually very, very, very curious about Lyft's earnings this first earnings.
Yeah, me too. You know, it's got a W pattern heading into earnings.
It could change a lot.
It could absolutely change a lot. It's going to be an interesting one. And then later in the
Jim Cramer probably should have waited for the first time it reported earnings to do his pumping on it.
The big one is going to be Disney on Wednesday after the bell. Roku, Etsy also after the bell on Wednesday.
Energy stocks too. Stocks this week too.
And I'm looking down the line, even some marijuana stocks later in the week. Kronos has earnings, Dropbox, Booking.com.
Very popular covered call stock within our community. Kronos is an obvious cover, guys.
If you are new to our community, we have an onboarding webinar tonight. We do one every Monday for brand new traders. Coach Frank will walk you through how to use Tackle Trading's website. It's at 8:30 p.m. Eastern. It is posted on the site as well. Make sure that you go and check that out. If you're a new member to our halftime crew here, welcome and subscribe and like our channel. Matt, we're going to go podcast
today, right? It's in the Tackle today.
Yeah, it is.
I'm talking the
daily email.
Right?
Yep.
Yeah, let me show them. So guys, if you ever kind of get lost with what we do on a daily basis and you didn't get the Tackle Today email, it's always posted here, Tackle Today. And then you just pull it up like a blog and you can kind of see the video of the day, chart of the day, you know, kind of the lineup we have here, obviously the Traders Lounge, then we do the halftime report, and then the market recap. And
no, the onboarding sent to new traders, it's a different email. We send it because it's only for the new people within 30 days, I believe. We usually promote it, but it is under, I think it's under shows, Matt, and then onboarding at the bottom.
Okay, there you go.
Yep.
Make sure they change that to pro. So let's make sure that's pro status only.
Okay, gotcha. All right. Anything else to make sure we tell people out here, Matt?
No, you know, I taught for Legacy Education. Obviously, Legacy is our partner at Tackle Trading. That's who we are kind of our parent to a certain extent. But I taught a great group of students here in Salt Lake City, and so guys, I posted the picture of it over there in the clubhouse. So if you want to see the great group of students that are now part of #Team Tackle as well, Go welcome the new students over there in the clubhouse, guys. They were such a fun group to teach T. And I've had the pleasure of teaching home team in Salt Lake City about 5 times now in the last 4 years, and I just love it so much. I mean, it's almost like Dallas when I teach in Dallas. I have so much fun when I teach in Austin or San Antonio or Dallas or LA or Chicago. And, there's just certain locations I really enjoy going to. And Salt Lake City is just, it was such a fun group to teach.
Yeah, I know that there were quite a few interesting students in there. A couple people instantly posted in the clubhouse, which grabbed my attention, tells me they're going to be power users and studs.
Hannah and Victor, Jason. Yeah, Victor and Hannah and Jason, they were so fun. They're so fun.
Yeah.
But we, even after the vet, we had to debate. We stayed after for an hour and just debated healthcare. And Medicare for all versus free options, and you name it. It was a really fun group. And watch out for Hannah and Victor. They're going to be killers.
Yep, I agree. Guys, we'll be back tomorrow breaking down the analysis. I got to tell you, about 2 hours and 20 minutes left in the day here. I do have a small rant.
Adam, I've never been to Alabama. That's one of the states I've never been in. I need to visit, Adam.
I agree. I want to go to Alabama. Go see a ball game. Got to go see some football or something like that. That'd be pretty cool. Bring up one last chart for me, Matt, if you would, on UVXY. I saw some trader posting on Twitter today about how you should buy UVXY and this and that.
He should delete his account.
People that don't know stuff should not say stuff.
Delete Twitter account.
Oh my gosh! Look at this thing on a 20-year chart, Matt.
It's the dumbest. It's
like literally
inverted ETF, triple leveraged NASDAQ for the last 10 years. It's so stupid.
Even a 3-year chart, you can see it. They have to reverse split this thing all the time because it continually fades and fades and fades and fades. It's a hedging instrument for algorithms and for hedge funds. And by the way, they don't even use it right most of the time. That they had one of them blow up last February for a reason. These volatility products are very complex, guys.
The anti-volatility people is like Cody with anti-vaxxers.
I don't know where that came in.
Don't get started, but yeah.
Yeah. All right. Yeah.
I had to nudge him a little bit.
Keep it simple.
I had to get. I saw him looking away, and I had to bring him back.
Yeah, I'll tell you. I think the message here is just keep it simple. Don't trade products that you don't understand. Things that are triple leveraged, quadruple leveraged against instruments that you haven't studied.
Let's go buy some call options on a quadruple leveraged ETF that gets reverse split all the time. It's so stupid.
Oh my gosh.
Anyway, Blake, Adam, I will love to ride the bull. Are you kidding me? That would be awesome.
Dude, Gilbreath Farms. I mean, they raise their own beef right there. Yeah. Yeah, Blake, awesome. That'd be cool. That'd be cool. All right, guys, we are done here. Great job today. If you are in the chat right now, just say, hey, great job, team. Love to hear some comments. If you're watching this later, leave us a comment underneath.
Linda's trolling me, Tim.
She likes to do that, and she has every right to do that.
Linda's trolling me.
Yeah.
Oh, I love our community so much.
Yeah, for sure. Have some fun with it. All right. Great job, Matt. Great job, Cody. We're out.